Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
If you study, money flows and you study, why long carry was so beneficial, in many instances, and this is not the best chart to use because the yen takes on a little more of a risk aversion dynamic up until at least last August anyway. But, take a look at Euro USD here in terms of long carry. That's not a bad proxy. There's better. Aussie CAD, some other ones are better or Aussie is a natural long carry position, just being the rate differential what it is. But, we get a sense here that this is what's going on between the euro and USD in a very, when the dollar during this time is just more or less being reflected as the carry trade out there. Extremely liquid, 0 to 25%, short-term rates. The yield curve being what it is, the Fed indicating, that at least the open market operations is not going to be tightening anytime soon, and that definitely helped exacerbate the pressure on the dollar and the rally behind the euro and other major crosses out there. Non-farm payrolls comes out. All of a sudden, economic data is good, and all of a sudden, all the Fed funds futures begin to reprice where the Fed's going to raise rates next year. Now it looks like we're looking at least 3 different hikes of a quarter, so about 75 basis points by year's end, which before that non-farm payrolls data, that was not the case. So I'm covering all this because this all plays a role in terms of how I construct a portfolio and how I want to manage volatility. Now this roll right here we saw after sort of consolidating and grinding higher, definitely an uptick in the average true range and definitely an uptick in realized vol during this time period here. Now, I'm inclined to think that we may make one sort of quasi-attempt back at this level again, which sets up the real natural fade spot, maybe the 147.50 level, and we can maneuver from there. But we've definitely had an uptick in the average true range in a lot of the currencies where the equities, as I'll show you, have not quite undergone the same type of price action. Looking over now, the British pound, again, it's not, British pound sort of has its own characteristics in how it trades. But nonetheless, though, February, we're seeing obviously a lot of volatility last year. The pound just getting absolutely destroyed. Questions about, just again, because of the Bank of England having to take a little more of a dovish policy, not quite performing to the same strength or extent that the Aussie and the Euro have. But nonetheless, though, market heads up here. Looks like a little bit of a head and shoulders pattern forming. No follow through on that. A little more consolidation. But nonetheless, though, a market that to me, if the dollar rallies, and especially with non-farm payrolls coming this Friday, it's something you want to pay particular attention to. But I think that that the pound, maybe even more so than the euro, can really come under a lot of heat and maybe head back to this 150 level in here. So we'll see how that all plays out. Looking at euro yen, this has always been, in my mind, a good proxy. Very, very, very active currency cross, going back to end of 2008 and really off of the lows here in 2009. And something that I think is important, something that's indicative, is that you look at some of the major turns in terms of currencies, in terms of commodities, and you look at like July 2008 when a number of the commodities really broke down hard, and really I think did a great job of sort of foretelling what was going to happen in the S&P. If you want to go back to then even early February and January, here's the euro yen here. February, where the S&P was still, making new lows, this market here was already carving out a high and talking a number of major crosses. So they were responding to what, in terms of the initial bit of short covering and risk appetite, fled into or migrated its way into those currency crosses before the equities followed. Now, as we fast forward now, while the S&P is breaking out to new highs, we're seeing a lot of these currencies, well off of their highs. And I think that, to me, sets up a play for, and I'll break down how I'm going to do this in a little bit, but more or less a long volatility in equities and a bit of a short volatility in currencies and some of the other plays out there. So I'll give a little more info on that as we progress through these charts here. But I take within my trading decisions, I definitely a lot of contextual analysis, meaning I look at the asset classes out there, really get a feel for the pricing behind them. And being that I wrote a paper on equity index spread trading, I'm not just limited to spread trading equity indexes. But really, spread trading is about understanding and defining values and relationships. And if anybody wants actually that spread paper, by all means, send me an email to the contact info or go to my website, and it's free of charge. It was published by another exchange, and you guys can get that. It's about 22 pages on spread trading, discusses software, discusses some strategies, so that's out there for you guys to enjoy. But anyway, looking at the dollar CAD here, the chart's obviously going to look reversed because this is the dollar weakness, whereas the last couple of charts I've shown have been more about, the other currencies leads the currency pair. But the dollar's obviously, fallen greatly against the Canadian dollar after banging against the 130 level, 130, bang, failed. Went and headed down, and again, end of February, this market started to cave in. It wasn't, at this point in time until the equity started to come around. So think that you want to be, really aware of these currency relationships as harbingers of things to come. Again, I talked about Aussie. In my mind, outside of Aussie yen, Aussie US does a great job of really depicting the whole carry, the sentiment behind long carry right now. And again, with the ISE options, the AUX being how you can take on exposure with the Australian dollar, I think there's some really great opportunities for you guys to come in and play these markets. So again, look at here. Market breaks, March, a little more in unison. Aussie tries to rally, consolidates, breaks, and just really grinds up and heads that way. So we'll see again. Aussie's not exactly back at highs again. We obviously on Monday or yesterday had a nice pop there. So got a nice bump in terms of what the Aussie did, but nonetheless, so the pullback off of highs was much deeper than we saw in the equity market. Okay, so some popular strategies in a declining volatility environment. It's just worth mentioning here. Selling straddles. Obviously, if you sell a straddle, the range is going to set up accordingly. You think the market's going to trade within a range. There's obviously a naked component to that. If the market, goes through a huge up move, huge down move, you carry with it unlimited risk on the upside and big risk on the downside. Obviously, the market can't go below zero. Iron condors as well. Basically, it's a combination of a bear call spread and a bull put spread. In some cases, some people may have more of a bias to the upside, slight upside bias versus slight downside bias, and so they may just sell a call spread versus sell a put spread where they think that, okay, I think the market's going to consolidate here, but I'm a little more bullish, so if that's the case, let me work a put spread. I think the market's going to consolidate here, but I'm a little more bearish. Let me, in that case, go ahead and work a call spread. And again, as I'm kind of blazing, I'm sort of going through this stuff. I want to touch on a lot of topics here, guys. So again, if there are any questions out there, I tend to speak fast, so go ahead and work that. Excellent. So again, like I talked about for the Aussie, looking at the AUM as a symbol there to play that based on this last chart. So if I take this last chart, if I think the Aussie is gonna go ahead and trade in a certain range, I may want to go and sell some call spreads on the AUM and then also sell some put spreads as well. In which case, I slap on an iron condor or some type of iron butterfly that can take on that viewpoint. Then there's also selling calendar spreads. Again, when you sell calendar spreads, time decay, if you're selling the front month working the back month, time decay is working in your favor. And the Vega component implied vol is working against you. So, in theory, you'd like implied vol to stay the same, although that requires a lot more babysitting, while that theta component just eats itself up. We saw in the early part of this year, a number of people who were working and selling calendar spreads, had done pretty well for themselves because there was such a steep vol curve between the front month and back month contracts. All right. Some other strategies as well: collared, married puts, fences. Again, the process of owning an underlying, selling an out of the money call to pay for a put. This is what people can do. In a high volatility environment, if they're not so comfortable paying up for that premium, that they can use the price of one option to fund the price of another. You can trade around the underlying and work around that respective trading range and go from there. In my book, One Shot, One Kill Trading, I talk about some of the specific strategies I use to at least put positions on and take positions off. For myself, as a guy that manages quite a few positions and puts on trades from different time frames, ranging from just a few seconds to a few days to a few weeks. A few weeks for me, pretty long term actually. But in that regard, I use all these strategies that I've talked about, and I'm going to talk about going forward here.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.